beauty is you have this tool that gives you most of the things that are relevant to a currency's movement. And all you have to do is use this thing that consolidates everything, does all the work for you, and then just read the news. Have like a financial juice, like what I do. I have my financial juice right here. News releases comes out, and I read stories as they go. Or, what Forex Factory or any other news outlet you can use. But most of the heavy lifting is done by the Edge Finder. Bashi, I don't know if I'm going to make an IG or an X. I mean, I don't really see a reason for it. I like being off the grid. It's pretty cool. When I was on like Instagram and stuff like that, it consumed a lot of my time. Charlie, what is the Edge Finder? Is it free? It's my first time hearing about it. It's not free, but there are ways you can get it for free if you don't want to pay. Right now it's on sale. It's 30 or 35% off. So it's at a discount right now. So you could take advantage of that. But if you do not want to pay like a fee or anything, there are other ways to get it free. I think A1 Trading has partnerships with like brokers and things like that, to where like if you trade with them or meet some sort of requirements, you can get the Edge Finder for free. If I were you, I'd reach out to the team here, and they'll probably help you sort something out. If it's not free, it'll be definitely cheaper than what it's always been.
Hey, Alan.
Hey, how you doing?
Guys, I met Alan in person over the weekend. He's a cool guy.
Yeah.
He came all the way to Georgia from Chicago. That was awesome.
It was so worth it, man. It was really worth it. I had a good time. I had so much fun that I had no idea what the score was until the game ended.
Yeah, I was a little jarred that the game just sort of stopped. Like nobody won. It was a tie. And then everyone just sort of walked away. I was like, oh, it's over. Okay. What Alan was just saying, yeah, there is a way to get the Edge Finder for free. We have a partnership with 8cap. I'll drop their link in here. If you deposit a certain amount of money with 8cap, you can get the Edge Finder. They'll pay for it for you if you deposit. I forget the specific amount, so you'll just have to click the link because I don't want to say it wrong. But guys, I'm going to put Alan's channel in the chat here. Make sure to go subscribe to him. He's been doing a lot of stuff with us lately, and it's been really cool. But Alan, I guess we'll see you next Tuesday, right?
Next Tuesday, yep.
All right, because we're bringing Chris Pulver in, so it was great seeing you again. And we're going to play a quick break, and Chris Pulver will be taking over the show right after this.
All right, bye everyone.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Interesting factoids coming into today's session. So yesterday, we have one of the largest put option volumes in history, which was interesting. We also have what is this? The fourth largest volume day since 2023. When that happened previously, we actually saw some bottoms that would have been back in, let me see if I can zoom in. That was the April bottom of 2024, the August bottom of 2024, and now. So the previous one before that was September, October of 2023 when you had a correction. So again, I'm looking at some short-term plays. Short-term plays where I think we have at least the market responding a little bit to a move to the upside. This is a trade I'm trying to close out for a credit. I've got a bull put spread, or I'm sorry, a bear put spread here and a bull call spread here. I'm trying to close this out for a max $2. My pending order is about $1.85. I still have another week of expiration, but I'm looking to take about a 100% gain on that position. I only paid like 98 cents. I'm trying to close that out for like $1.85, $1.90. So that's when hopefully going to just settle in and get me filled. We are noticing, I'm noticing some wider bid mid ask prices in the options market, which is not super awesome, but it's just part of the game. We got a couple trades running today, notably on the SPX. Things are relatively calm, not a ton of news today. We had JOLTS job openings this morning. That's about it. Lows from yesterday. I got pretty lucky yesterday on a 3-for-3 trade where I had a trade in the morning that made some money, trade in the afternoon that made some money, and what is the other trade that I did? Oh yeah, it was a longer duration trade that I closed out for a quick win. So anyway, I'm looking to see if this level today, 55.30, will hold. Hopefully it will. High of the day, that would be about a 100-point move to the downside. That's clearly not safe. Like if the market's gonna sell off and make a fresh low, I've got a broke wing butterfly here today, but I'm hoping that we kind of put in, a low that's maybe market can like test it and maybe rally off of it a little bit. We have CPI data coming out tomorrow. See if the market's going to be at all excited about CPI data tomorrow. Maybe, maybe not. Forecast CPI is 2.9 versus previous 3.0 for the year-over-year headline CPI. We took a look at this from the Bloomberg calendar, which is what I'm paying a little bit more attention to this week. If you just go 12th and 13th. So the data for tomorrow morning, year-over-year headline CPI 2.9%, so expected to be a 1/10 increase or 1/10 improvement. And then the core CPI, previous is 3.3, forecasted for 3.2. If the market's going to show a reasonable move, Intel back down to 19. Okay, fine. I got out of this trade for profit. Okay, that's fine. I'm out of Intel. Let this one just hopefully reset. This could be a good opportunity in the medium to long term. We had a nice little rally here. I do have a pending order. I might just put this back around like 15 bucks on Intel. So if we settle into these levels, anything below like $17, $15, I think this is a pretty good buy opportunity on Intel. So keep a close eye on that one. Let me set a chart alarm at 16. All right, watching a couple trades on SPX today. See if that will just, more time is needed. I'm down about 20 cents on the trade right now. All right, so blood in the street yesterday. I mean, it was bloodbath city. This is the heat map from yesterday's close. Almost 80% of stocks declining. It was a pretty painful day, and you can certainly feel it. It was interesting to see Berkshire Hathaway had a green day, JP Morgan, Morgan Stanley, Goldman Sachs. There's a few sprinkled in, obviously. Like, you got 7,000 stocks. They're not all going to be red, but 80% were red. And the S&P was down. This actually was an earnings multiple, so it was a pretty ugly day yesterday. But some of the big levels that I've been talking about the last few weeks, I still am somewhat optimistic that this market is going to find a low sooner than later. And so that low is hopefully anytime. April, August, this area, maybe CPI data tomorrow is enough to get this market excited about something. I'm a little skeptical of the rally to the upside as far as how high we go. I don't know if we get all the way to all-time highs. In fact, I think we don't. But I think even a little relief rally where this may come down and poke and maybe get right at that 10% level. I'm really curious how this plays out, like to the percent. If we go high to low, we're right around 9.4% on the SPY or S&P. So do we push a little bit lower? I mean, what's another 0.6%? If we get exactly to around 10%, that puts us around this 55, like 30 area, 55.20 area. I've said that 57 to 5,500 is my window to be buying for the next couple of weeks for some short-term gains. So I'm looking for a bounce in the near term. What I'm going to also look for is on a shorter time frame. If I put in a couple of moving averages, if we start to get some up days in the near future, then I'm probably just going to look at doing some bull put spreads below some automated trend lines and just trying to grab some short-term income. One thing I'm gonna attempt to do is trade through this in the near term as well as be positioned for the medium to long term. My plan, and I talked about this a little bit yesterday, would be if we get a rally to the upside, I will be de-risking. Okay, so a de-risk. What that means to me is any trades that I am not enjoying, any trades that have been upside down and causing me a little bit more pain than what I'm wanting to see, that I'll be getting rid of those trades at small wins, break evens, and small losses. All right, so I'm going to limit some of my exposure just because here I still think there's a lot of uncertainty. So if we come back up and we kind of balance out this fall, we kind of balance it out, I don't know if we're going higher or lower. And so rather than taking on, more risk and still getting flushed out to a fresh low, if that is the case, I don't want to have heavy amounts of risk going into like a second wave lower. That makes sense. So if we see a short-term rally, I'm looking to de-risk. That might entail taking some losses, probably washing some good with some bad, but getting rid of some of the exposure and kind of making my portfolio a little bit more market neutral. Right. But I'm looking for that to come, relatively soon. We just crossed through the 200 moving averages, some pretty good technical support. We've had some capitulation type feels, like yesterday it felt like capitulation a little bit since it just, opened lower and slid lower all day. XSP, same type of thing. That's why I put in here this 585 to 600 window is kind of a risk relief rally. S&P, SPY, same thing. Watching to see what this percentage looks like. So high on the SPY, down about 9.4%. If it drips down to like that 10% level and then pulls back, that would be fine. RSP's equal weight, we're actually back down to the lows from early in the year. Interesting. I do have a symmetry measurement. I might end up picking up some more RSP. Discount wise, if we come to some fresh lows, that would be a 10+% discount on RSP. Let me see, check this. So 2022, or even this pullback in 2023, this pullback was around 24%. Okay, that was that bear market? No, that was 2020. Yeah, that's okay. So bear market 2022, about 23, 20. I mean, it's about the same. So I don't see it necessarily outperforming. But if we're at a 10% discount, it's not a bad spot. So anyway, I've got some positions in RSP. I think equal weight could perform as well, maybe even a little bit better than SPY this year, just because you're taking out the concentration with Mag 7. Futures market, I did close out some hedges. So I had an MES hedge here that I did close out for profit. This one I closed out today. So this trade was a $93 debit. And I closed it for 140 today. So that trade's out. And I closed out also a 5,000 put, which is a way out of the money put. This was like dirt cheap, way out of the money put here. And with the velocity that we've seen over this correction, I turned a 22.75 debit into a 52.50 credit. So overall, pretty good gain on that one. So that would be 52.50 minus 22.75. That's 130% on that hedge. So close out a couple of hedges in addition to some of the other ones I had running early in the year when we were up to these highs. I did some bear put spreads, closed those out for some profit. Overall, the hedges have been helpful. I'm not saying they were perfect because I'm pretty much flat now for the year, which is not cool at all. But the hedges are there to at least alleviate some of that. And if we do see some recovery, then it's easier to get back ahead with about $30,000 in hedges. But it wasn't enough to just protect the entire portfolio, but that's okay. So I'll continue to trade through it. I am interested in the Qs, but not as much. I think SPY might be a slightly easier index to trade. The Dow, I did actually buy some shares this morning of the Dow. I bought some shares I'll actually update that. So DIA, this is, got to check my account here. So this is 6746. Adding shares. SPY. So I bought a chunk right here. I bought a chunk of the SPY at 559.38. 559.38. And the Dow, so 559.38 was my fill on the SPY, and the Dow 418.10. Okay, this is strictly just a cash account. So I will be looking for any type of bounce. If we have any type of bounce, then probably taking some short-term profits. In the Dow, we come up to say 430 to 435. Turn that into a little chunk of profit. I'm good with that one. And then on the SPY, we come back to this 580 to 590 window. Looking to take some profit there as well. Okay, watching some levels. Hopefully we're not making like fresh lows without having a bounce today. If we stay relatively choppy, that would be fantastic. Let me see where my SPX is at this morning. Okay, so my 265 credit still trading for about break even. I just need some more time. Come on, man, just get my freaking profit target, would you? Keep this one running to 215 today. I'll keep checking on this one. And then I've got a broken wing butterfly that is a 55.30 level right here. Hopefully price will respond a little bit to the upside. Come on, market makers, do your job. All right, economic calendar for tomorrow, like we mentioned. Markets expecting slight improvements in core CPI year over year and headline CPI year over year. I talked about this third-party reading, Truflation, and it's lower than what we had back in September. So when the Fed pivoted hard, the market pivoted hard, the bond market went nuts. The concern is that we have a pretty nasty slowdown ahead. Okay, I mean, let's go inflation. And we're at fresh lows on the day. SPX, you piece of crap. All right, let's see what happens. Dow, sprinkling in some fresh lows. I'll go back to SPX on this one. Dow, just below the 200 moving average. Looking to scoop up some, or if we come back down to like $400, I'm good with that. I did put on some trades earlier this week I think it was either last week, Thursday, or on Monday. I put in this trade on the DIA where if I did take any ownership, I would own the Dow at 383. I actually like that trade quite a bit. Russell, not touching the Russell at all. I do have some trades running, threatened here around 190 or 190. This is out to March. If the Russell responds in any way, shape, or form to past resistance becoming support, it'd certainly be nice to see this little pattern playing out. So a high, low, lower, high, lower, low. If we respond with anything there, then this trade just becomes an income trade. If past resistance becomes support, I'd like to see a little bounce. Are we in 20% land for Russell? Pretty close, 18.9% on the Russell from top to bottom so far, peak to trough. So maybe we carve out a 19 to 20% correction. IWD is your Russell 1000. You got your Russell growth looking like garbage right now. You got your Russell value that's also just falling pretty aggressively. Cheap enough, yes, I like it, but man, I want to do a little bit more digging on what are these top 200s, how profitable are they, and that would be probably the only way I'd diversify into small caps would be something like the top 10% of small caps, so they just have a little bit more opportunity to be profitable, as opposed to what scares me about the Russell is about 70% of companies are not making money. All right, are we having another freaking capitulation move today? Like, come the heck on, man. Yesterday was ridiculous enough. This market gapped over 1% lower and slid from, I mean, we had a 3.5% slide yesterday before we ended up ripping up, not rip, it's not a rip, that's a relief towards the last like 20, 30 minutes of trading. All right, hopefully today is just a poke of the lows. Market can pull back and just, make traders a little bit nervous, but don't turn red. Don't turn super red on the day. All I'm saying is just don't be a turd, market. I think we've dealt with you long enough for the last couple of weeks. We've had, now this is 4 weeks of selling. Go back to the charts here. We have week 1, 2, 3, and here's 4. Doesn't seem like a lot of fun to watch the market just bleed, 9 to 12% to the downside with just, a little bit of chop, but mostly just big sell days. But that's what bear markets feel like, and we're going to see, how much damage is being done. Dollar index. Let me go to a different chart here. SPX. Let's go DXY. What would you want to see right now for US dollar strength? I don't want to see any dollar strength. I don't think we're going to have any dollar strength. Technically speaking, would you call dollar strength in this area? This is such a random spot to be like, is this thing going to turn? I don't see that at all. If I'm seeing dollar strength, I want to see this dollar down here. And I don't know if I'm going to get that trade. I don't know if this, this is a very inefficient decline in the dollar. And the euro has really been the best currency to trade against the dollar. It's just been straight up once we had that surge above 106. But this is such a random spot to say, I want to see dollar strength. I don't think we're going to get it. So I wouldn't mind seeing the dollar settle back into these levels and then see if this area offers up some support. So, what a ridiculous move, by the way. Coming up here to, 110, I thought we had some pretty good structure here to say, all right, well, I guess the pain trade would be this rips up, we pull back in base, and then we have more dollar strength. And that, brings about some really difficult situations where the dollar is so much stronger. But man, we're seeing super weak dollar. So I'd say let it do its thing. If this is going to pull back and sell, there's maybe some support around this 101 to 100 handle. But I straight up missed it. This trade for me was, I was looking for support and a trend line break. I didn't get it, so I didn't force any trades in the dollar, and it's fine. New Zealand dollar still back to break even. Aussie dollar I closed out for profit. Dollar Swiss continues to drop, which I'm okay with. I might load back under the dollar Swiss positions here. So if we come to like 86 down to 8,400, I'm going to be looking to sprinkle in some more dollar Swiss longs and try to range trade this thing. If we go dollar yen, I don't want to trade dollar yen short because I don't want to hold the negative swap. But this does look like after breaking this low, this could be setting up a topping pattern. So I'm trading this still through either Japanese yen futures or FXY, just holding shares long. Currency strength. Yesterday was Japanese yen rising to the top. Come on, browser. So yesterday we had Japanese yen rising to the top. Today we have euro on top. Japanese yen weak now, going back to baseline. Canada is getting weaker. So euro still getting a little nudge from the weaker dollar. So I just, look, yen pairs, let me take a look at the other yen crosses. Okay. Aussie yen, be on the lookout for this. There's no confirmation for it yet, but be on the lookout for this in the currency market. We have a flash crash low here. If you get a trend line break, there's no reason to force this trade. But if you're willing to take a little bit of a bite down here with some small trades, that would be my risk. I'm looking for confirmation. So I've got my anticipation trade here, my confirmation trade here. Obviously, the less stressful is just trade confirmation and don't force a trade, right? So I see a case for support, and this July to August swing from last year still provides some support, and see if this wants to come back up. Could this be a bit of a relief rally with showing some risk appetite? Sure. This could be risk appetite, right? Japanese yen gets weaker. Hold these August lows. That would be an interesting trade. CAD yen, similar, right? Testing the lows, but no confirmation to buy this yet. So don't call the bottom. Look for a trend line break here. Look for a trend line break here, and see if price wants to turn. But don't call a falling knife if this thing's going to continue to drop. If we have risk off trading, we're going to see a stronger yen. It's kind of always the case. When we have true risk off trading, you're going to see the Japanese yen get stronger. So this is why I continue to be long these shares and this, so I can just trade options as opposed to holding negative swap in the currency market. Swiss yen. This one you have kind of two safe havens duking it out, so I'm out of this trade. Euro yen. Euro's made a big move to the upside. This is like the only pair that has been holding this low, right? Every other yen pair, Aussie yen near the lows, CAD yen at the lows, Swiss yen near the lows, Euro yen because of that bump, weaker dollar and the big surge in the euro. We've seen this one hold the levels around 155.50 and bounce up about 500 pips. Again, if you're watching support, it does behave. I wouldn't be shocked if other currencies kind of did that, where we hold these August 5th lows of last year, but look for confirmation on smaller time frames. Pound yen, this one is a chop fest. Pound yen's not anywhere close to this August 5th low. This one is extremely tricky. So I don't want anything to do with the pound yen. New Zealand yen, we're also back down to the lows. We're going to see if this risk appetite actually holds. This one is actually right around the flash crash lows. Trend line break, have we had it yet? No. There's a trend line. There's a trend line. So if you're looking to take some bites out of this, maybe some confirmation of holding the lows and stop loss below, and then higher lows and higher highs get us back into some of the structure here, maybe pulling back in the same area, right? But waiting for confirmation to see if the coast is clear to take that trade with stop losses below that you can move and trail along the way. Okay. All right. Other positions, Aussie CAD, finally starting to show some better signs of life. I'm bullish on this one. Aussie Swiss still holding. Aussie New Zealand back down to break even. I'm just going to hang on to this one a little bit longer. CAD Swiss, I did. Ugly. It's a good spot to be adding. I'm going to put in another position, wait for a trend line, stack up some more trades, and try to get back to around 6,400 on the CAD Swiss. Again, trade small because this one has no signs of being the bottom yet. Fiscal policy, Sarah. That's why Euro's ripping like crazy. It's the first time in years that probably since like kitchen sink monetary policy with Mario Draghi that the Euro's actually had a lot of attention. But you're coming out with like government spending for the first time in a while. I'm trying to think what the phrase was. I was listening this weekend to a podcast. I think it was basically the belt buckle was extremely tight for the Eurozone, and now they're starting to loosen it. So your fiscal policy is starting to sprinkle into the markets. The markets are liking it. You've got your indexes up, your euros getting a lot of momentum, and it's been surging pretty aggressively. But it's been mainly fiscal policy for the first time in a while. CAD yen we just did, Swiss yen we did, Euro Aussie. I'll take a couple of currency pairs. Good Lord. I don't know what to say on this. This thing has ripped to the upside. There's so many bullish candles here. I don't want to be buying this. I think this is a terrible position to call the top. I think this is a trade you can't buy the highs. You have to remember, look, currencies are not like stocks. So when you have a rip like this and it is so one-sided, this is up 1,100 pips almost. 1,055 pips in what? A couple of weeks? Like, that is insane. So what I would do is I'd look at a fib, start from a low, go to a high, and look to see if there's any pullback here that you could buy in and see if there's some continuation. That's about it. Like, this is insane. This is not typical. This market hasn't been this decisive since we had this run during that July to August risk-off event. You'd almost think there's a crazy risk-off event happening, right? In a way there kind of is, but wow, that's nuts. And, because we had equal lows, I'm just really surprised that this swing was not just finding some resistance, but it just blew right through it. So It's kind of crazy. And this is, Euro Aussie and Euro CAD, right? Look at this thing. Euro CAD to the upside, up over 1,100 pips. Euro New Zealand, same thing here, up 1,000 pips. Pound Aussie, 97 to 206, up 1,000 pips. Pound CAD, up 1,100 pips. Pound New Zealand. I mean, when I used to see trades like this and be like, oh my gosh, I totally missed it. I mean, no, this is not the same currency. I mean, this currency from pushes and pullbacks, highs and lows, reds and greens, it's fairly balanced. And even when the market goes up like this, it comes back down. So this is why I just can't justify like jumping in and chasing this thing. It's obviously a terrible sign to call the top. You don't want to fight this momentum. But I'm not buying this thing at the highs, because at any point over this move, this surge, we're probably going to have some type of pullback. Now that pullback could be here. That pullback could be here, right? You can just drag a fib and look to see, okay, roughly speaking, where is a decent pullback? So I'll just say that that's hypothetically my high. Well, if I get a shorter time frame area that starts to roll over into some sell zone confirmation, then I can have a trade that pulls back to maybe 7,160, maybe 7,100, maybe 7,000, and that'd be about it, right? For a pullback. I mean, don't be greedy. If you get a pullback to cooperate and you get 200, 300, 400 pips, great, good trade, and just get out of the trade. But that's if you're confirming on a lower time frame. Otherwise, if you want to be thinking this is the momentum to the upside to buy a dip, then you're looking for these to be swing levels to build a position to see if it can retest the high. But I don't chase this stuff. It's silly to chase it, stupid to chase it, so don't. But these moves have been pretty outrageous and kind of non-typical, But that's the nature of the game. Like, it does some stupid stuff sometimes. Pound dollar never broke the trend line, never forced a trade. Now I'm curious if the dollar continues to weaken. My play on the dollar would be let this thing fall. I'm already late. I'm not selling the dollar right now. But if we fall into some support, there's obviously some levels here around 101 to 100 to see dollar strength. New Zealand CAD looking better. Long in New Zealand CAD, hopefully getting back to swing highs around 8,800. New Zealand Swiss I did. New Zealand Yen I did. New Zealand Dollar I did. Dollar CAD, anything here? I don't know. This dollar CAD stuff can be tricky. This is a super slippery pair. I feel like this trade for me that I went from like 134 to 145 or so, that trade was probably my best trade in 2 years on the dollar CAD. Because before that, I couldn't get a fill to save my life. Because all I was waiting for was, I bought some here, made some money, sold some here, made some money, bought some here, made some money, and then I just waited, right? I sold some here, and then I just waited, and I never got filled until I'm like, well, I'm going to start scalping. So I started to build, but I mean, I waited for an entire year to finally get this trade to set up. And now I'm like, well, I mean, we hit a 2020 high and a 2016 high. If this is any type of topping pattern, I could see there being a swing back down to this level. But based on this move and consolidation and move, if we have any additional pullback, I think this market's still going to go higher. I think dollar CAD can still go higher, but we're also talking about dollar CAD potentially reaching, all-time highs on the retail chart, which is back to like 160. So we'll see. Euro dollar, if it's above 106, I think it's still bullish. But look at, I mean, again, what do? I'm not going to chase this thing. This thing just surged from 103.50 to 109. So if there's any pullback, I mean, there's a lot of inefficiency in here. One of two things: either we get a pullback on the euro dollar to get long again, right, and try to take out this or challenge this 111.50 to 112 level, or this thing just screams and screams and screams, and we find resistance, and you can sell the crap out of the euro dollar at 112. If we have confirmation, look for it here, sell it at 112, get a nice high to form, confirm it, and then you can sell it for anywhere between, a couple hundred pips on a pullback to maybe even a 106 retest. But this is moving very inefficiently. It's pretty simple. Like, this is a crazy inefficient move. If there's more to that, this is likely going to be pulling back. So, I mean, it's it. Like, there's lots of chop in here. We've clearly seen a nice range the last couple of years between this 112 and 106 handle, even 112 to 105 handle. So I'm not necessarily like super bullish, but I would say because we're above 106, I'm not bearish on this. So if this is up, 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 you can go to smaller time frames and try to find some precise entries. Otherwise, excuse me, this is my resistance level. We confirm resistance there, let it roll over, and then see if you get a nice trade. But there's going to be some slop going on. All right, SPX, come on, dude. This thing has to be freaking close to profit. SPX trading at 230. Good Lord. These trades are taking forever these mornings. All right, hopefully I can get 50 cents out of this one. And then my SPX trade defended at the 55.30 level. That'd be nice to see it hold for the day. All right, we get on those pairs, currencies. Let's do a couple other things here. UNG, I'm still long natural gas. Gold, 29.15. Gold hasn't really done much. That's okay. This one been one of the surprising, like, kind of mundane trades the last couple of weeks with all the excitement of the index is selling off. Gold has just stayed pretty resilient. I'd still like to see a bit of a dip on gold just for better buying opportunities. I still like silver, which right now is getting this slight nudge, which I'm happy with. So still comparing gold versus silver. If this continues to head down, that's a good play for silver, which is why I'm still long on both, but I prefer, technically especially, I still prefer my long on silver. See if we can get up to some fresh highs. Bitcoin, lots of chop. Past resistance around the 75K mark. Let's see what price does to respond to that. If this resistance becomes support, I think this is still too early to call the bottom. I wouldn't be surprised if this market just gets really ugly in here. But if we can get free and clear and hold this 75K support and not do too much damage below it, I want to see price on Bitcoin respond to that level. Right. And I think that would be a bit of a bottoming pattern. If we have risk on trading, like that could be an excellent move on Bitcoin as far as the technical trade this year. So if we have some response to this 74, 75K zone, and we can break this trend line around, I don't know how fast it's going to move, but if we just consolidate, we get a nice move to the right side of the trend line. I could see us going from 80,000 back up to, 105, 110. If we break some highs with the momentum, I don't know. Do we have to see all-time highs in the S&P and the Nasdaq in order to get Bitcoin to all-time highs? I would imagine yes, but anything's possible. Okay, MicroStrategy. Let me see where my profits are at for these covered calls that I'm in. It might be worth it just to roll it down or take some profit. MSTR here. Okay, this trade is income for this week as long as Microsoft stays above 375. $1.20 of income. Hopefully that stays where it needs to be. MicroStrategy, my collar trade, got about 65% of the premium sucked out of this thing, up about $4,000 in that covered call. I could and should. Let me see if I roll this thing. I'm curious if I roll this thing down. If I roll this to an earlier, oops, I want to go back in expiration. So if I roll this back, down, Nope. I'm just gonna let it decay further. So if we get a decent surge, I mean, and this thing is crazy volatile. I mean, it was up here to 321, which would have gotten called away. If we have some stability here back in the 240 to 200 zone, this isn't a bad spot to look. This area, or even looking here for like a bull call spread, not a bad spot to get long. I'll watch this one for maybe a defined risk trade. Coinbase 189, needed to stay above 190 or so by the end of the month. Hopefully we have a decent little risk on rally, even short-term rally, give Bitcoin a little bit of a run, give Coinbase MicroStrategy a bit of a nudge. Copper still looking great. This copper trade is looking for full profit, hopefully in the next 30 to 40 days. Japanese yen, Nikkei. DAX pulling back. This is fine. I wanted to see a pullback on the DAX. It's happening. I'm going to start selling some more premium on FEZ, which is my Euro stock ETF. FTSE dropping a lot harder, so I'm going to stick with Eurozone right now, stick with Germany. Argentina also pulling back. Maybe. I was going to say maybe, maybe not. China still hanging above those September highs. Brazil's fine. Mag 7 for the first time today, not necessarily breaking fresh lows. Are we getting another freaking push, dude? Stop fucking going down. So checking some levels here. Hopefully we see some stickiness around this like 558 level today. If we see fresh lows, I'd like to see a bounce. I'd like to see market makers do their job today and keep things relatively stable. Yesterday was not that day. Yesterday was gap lower and flush lower. One of the worst days we've seen since 2022. So it was a painful day, painful trade. This like nearly 10% slide is still happening. So if we're just going to keep testing lows, I just want to see if this thing bounces around. But don't get sloppy on me. All right, we'll see what happens. Apple. This is Mag 7. So Apple income trades all the way back down here towards 205. This is only out to next week, so a little income trade here. I do have some wiggle room. I mean, I wouldn't take any shares of Apple until it's $200, which if I did take shares at $200, that's still a pretty decent discount, at least in a corrective manner. So high, low, lower, high, lower, low. If that was the case, take on some shares, try to repair that for a couple $1,000 hopefully, and then same thing out to April. Even the strike's a little bit lower. This would be a 185 if I'm taking on any shares. Amazon off the lows a little bit. I'm going to just keep it in there. I've got a next Friday expiration, a 200 by 195 ratio spread. AVGO choppy since earnings. Google just leaking a little bit lower, but still like these income trades. This one, it has to be all the way down to 145 in order to take any ownership here. My break-even would be 145. VSCO, I don't know what that is. I'll take a look at that one. Clearly, I set a chart alarm on it. So I like my Google levels. Meta, I talked this year like it's probably coming back to the 200 moving average, and it is. This has been a really nice way to be bearish on Meta. It's down $150 from the highs. I had bear call spreads and some fancier strategies that I just said as long as we, don't go higher than like 750, 760, there's money to be made. So that's all worked out pretty nicely. Am I interested in buying Meta? I mean, I think in the near term, yes. Like the near term trade on Meta could be an easy bull call spread. So that may be something I put on in the next maybe week or two. But my concern is that this just becomes a short-term bounce and then more pain. But I don't know. I think Meta at the 200 is going to offer up some profitability. And if I get that, I might just do a simple, debit spread. So I'll watch this one. Let me set a chart alarm. Let me just set a chart alarm here on the ad alerts. And once we tap that 200 moving average, then I will look to take a debit spread. So delete that and just set the alert. Only once, it's fine. Yeah, just touch the old moving average. I don't know why it does that, but okay, that's Meta. Microsoft. I've got some income running for this Friday. If we hold above 375, which so far so good. If we stabilize these lows, that'll be a little income trade for this week. Netflix, still looking for another trade to pull back. So if we go pull back here and then flush down, I don't mind scooping up some Netflix in the 700s. I'm probably just going to use the dollar cost average position. I have a trade out to next Friday for $2.56. So if we stay above 655, which I'm not really worried about that trade, but that should be a nice little income trade for next Friday. Nvidia 106. If we can again kind of stabilize here, stop the bleeding around this like 105 to 110 level, maybe a short-term recovery back into the 115, 120 handle. This one's out to April, so I'll keep an eye on that one. Tesla, probably one of the worst stocks, where it feels to be one of the worst stocks this year, down 56%. For what was loved post-election is now just like a dumpster fire. I mean, I measured out the technicals. We, surged through all-time highs. I get it. It's volatile. It's overvalued. It's trading for a high multiple. I understand. This one is out to next week. If we get a push, I'm going to put a chart alarm here. It's a 255. So if price is greater than 255 by next week, then I don't have any assignment. If it is higher or it's lower than 255, then I take a break-even trade around 247. Do I think I can repair the stock? Yes, I do. If I take the ownership, I'll repair it. Probably look at repairing the trade for a couple $1,000s. Not looking to own it long term at all. This trade especially, I think having cash at the ready. This is what I talked about with de-risking. This is one of the trades that I want to be de-risking. So if we get a rally back up towards 250 to 255, then I'm hopefully going to avoid the assignment. If I have the assignment, that's fine. I'll flip it for a 2 to 4 week expiration covered call, and maybe even consider selling one in the money that just lowers the cost basis dramatically. Berkshire probably pulling back from all-time highs. Bond market had a decent pullback. I don't really have to do anything yet. I rolled out some calls on my diagonal spread to April. That's above $92. I'm just going to let that one marinate for a second. Fed funds rate. We should have a release this week on the 30-year mortgage. I think it's actually tomorrow morning. If we go to economic calendar, 7 a.m., you are going to see the 30-year mortgage rate coming out. This should be from, I think Fannie Mae, Freddie Mac, something around the 6.63 was their official one last week. But we don't have a new forecast or anticipate. They just print it. So I'm just curious what that reads, and then this chart will show something. So we're currently trading around 6.63 for the 30-year. The 10-year yield has fresh lows of 4.10. We're kind of hanging out at 4.22. Just anticipating some mortgages. This was around 6.05 for the 30-year. This is around 7.05 for the 30-year. So it makes sense that we're probably going to look at a release around 6.5. It's obviously better. I don't know if the 10-year continues to drop. I kind of hope that it does for the sake that I'm closing on a house in May, but we'll see. And then some other stocks. JNK, I'm just looking at this one. This is probably not a great sign. This is why some of the bid mid-ask was a little bit off this week. We are seeing this finally starting to pick up some steam to the downside. I do want to keep a close eye on this. This is an important thing to watch when it comes to liquidity in the markets. Okay. Anytime we've had some very risk off, very scary times, this instrument has been dropping. So 2022, yeah, not good. Okay. And that's really the last big scare. I mean, 2022 into 2023, pretty stable through that correction in September, October 2023. We bottomed out in 2023. It's been surprisingly stable in here so far, but I am keeping a close eye on this to see. Let's make sure we're not really breaking any structure on JNK. And then LQD is another one similar, just making sure this thing isn't falling off a cliff. So hopefully we see and maintain some liquidity. China stocks, Alibaba, Baidu hanging in there at 94. I've got collars into April at 100, 105. If it gets called away, that's a nice chunk of profit. Still hanging out towards the September highs. $40 and change on this one. Okay, out to March 21st for a $40 covered call. Schwab dividend, I still like it. That's a nice pullback. This is a good ETF this year. In fact, I mean it's cheap enough. Here is SCHD holdings list. That's perfect. I looked it up before. Here you go. How many names do we have? We have 103 names in this Schwab dividend holdings. So weight-wise, it's still weighted. You've got some big players in the top. Home Depot, Verizon, Cisco, BlackRock, Pfizer. I mean, some of these weights are pretty good. These are solid, consistent dividend companies. Yeah, not bad. All right, just got closed out for 215 in SPX. Thank God. Only took an hour and a half this morning. Okay, so that was a nice little winner. All right. So update SPX DPP this morning. $2.65 credit, close 2.15 debit. Profit target hit. And if we stay above 55.30 on the SPX today, then I will get another $1.20 out of my broken wing butterfly. Another $1.20 right here of credit on the day, which will feel pretty good. Market is making a little bit of a run for it. So I've got some P&L, which is finally starting to show some green. Kind of a, shitty couple of days to see 195K turn to zero. Open positions, so it's not like I'm taking on losses, but that's a big fluctuation in P&L, which has not made me super happy for the last 3 or 4 trading days. That being said, though, stabilization is hopefully coming. If we stay above, I've got one level here that I'm watching closely on XSP. If we stay above 560, that is good things. So greater than 560, I'll be very happy. Greater than 550, I'll be very happy. Greater than 540, I'll be very happy. These are all within the next 30 days. So watching trades on XSP, which is your mini SPX. Any other stocks I wanted to review today? Not really. I think the big takeaway is going to be tomorrow's news. How do we react to tomorrow's news with inflation data? Are we putting in a near-term low at all? This is one of those situations with CPI that the market in the past has had CPI where we gap higher and we just rip off of that, and that could be the start of this rally. We might see the market, gap lower and then have a gap to fill. Either way, I'm just gonna say this for my personal trading. I'm still looking to be pretty bullish tomorrow on CPI. I don't necessarily want to be heavily positioned before it, but I don't mind the trade looking at, I'll post a trade I've got an SPY trade that I'll post in my Pulver alerts. But I'm basically looking out about 30, not even that. I'm looking out about 10 to 20 days. 10 to 20 days. If I can play just a little bit of a gap fill, any type of recovery here for the next 10 to 20 days, I'm just looking at a short-term game. So even if we go gap higher and recover or gap lower and fill, I'm still looking at positioning for some type of short-term rally. And like I said, any short-term rally is a risk relief rally. So if this happens, okay, take advantage of that for some short-term profits, which I hope that I can. And when we get back into some questionable levels, like, is it possible that the market goes higher than this? Look, I'm not going to beg the market to go back to all-time highs. If it does, pleasant surprise, and I'll have full recovery. By the time, this is what's crazy, is by the time we get to probably here, I'm probably going to be back at my high watermark for the year at 195K. So if we do get to all-time highs, this is why it's important that I de-risk, because if I'm getting near all-time highs where I think this is a de-risk area, if we surprise to the upside and we make all-time highs, well, that's fine, because this all of a sudden swells to maybe 250K or 300K in profit, which is great. But from there, it's like I'd still be looking at the same nonsense of maybe this market is just a freaking chop fest this year with all sorts of wild and crazy stuff. But I'm looking for a short-term rally. So anything around the 5,800 to 5,900 window, I'd say max to the upside. If you're still looking at this resistance, we about 6,000. Anything from there, I would say I'd question the bull's ability, unless all of a sudden there's all sorts of clarity out there on tariffs and what we are or aren't doing, whether we're delaying, whether there's concessions, whether we're reducing. I don't know. If that starts to come more in light, fine. Also, next week, we have the Fed. So we have CPI data this week. That might also entice the Fed. And I don't think they're going to make an emergency cut or anything. I think they're still going to pause for this month. But the probability might shift into a, maybe even a May or June cut. So we've already expected like a high probability for June, but now the probabilities continue to shift where June, July, and September, 3 cuts for the year, and it's stacked in a little bit closer together. So here's one thing that's pretty easy to telegraph. If the Fed mentions like a big improvement of inflation, and again, they're very careful on their language. It's Jerome Powell's press conference, but if they're just watch the tool. Watch the CME watch tool. Look at the probabilities. Does this shift at all? In fact, I'm just going to go ahead and take a screenshot of this right now, just so we have a reference point. So Fed watch tool on there it is. Okay, so this is today's date, March 11th. March 11th, 2025 at 11:14 a.m. Eastern Time. So will CPI plus PPI change the Fed for March 19th FOMC? That's the question. Fed watch tool, March 11th, pre-FOMC. All right. So just a question. Does it change at all going into this week's data? Is the inflation improving? This is why I'm considering that we might have a better than expected CPI and PPI combo, because we have seen this thing drop to lower than the September levels. So that would be lovely to see some inflation making some big improvements. And that's why I'm also wondering, based on the timing of this, forecast for 2.9 year over year. If it prints 2.9, maybe the market likes that. If it prints 2.8, 2.7, maybe the market loves it. All right, that's what I'm watching for. So for tomorrow's news in the morning, 2.9 for the headline CPI, that's year over year, and 3.2 for the core year over year. If these are both improvements, I think the market might like it a little bit. And if they're decent improvements, like 2-3 tenths under what's forecasted, the market might recover pretty swiftly. And we'll see what the Fed changes as well. Okay. All right, sounds good. All right, buddy, I'll let you go for today. Back at it tomorrow. CPI news coming out at 8:30 a.m. Let's see what happens. Markets are relatively calm today for the first time since whatever. I wouldn't say Friday was calm necessarily, but it kind of was. Yesterday was. This is two of the wildest Mondays I've seen in a long time. Having a 1% plus gap and a 1+% flush. That rarely happens on Mondays, especially. And the week before that, the previous Monday was just a crazy gap up, and it flushed down like 2 to 3%. So anyway, I still like the levels we're at. I'm taking some short-term buys, and I'll post that in the Pulver. You should see that for the next 10 to 20 days. All right, we'll see you tomorrow. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.